Welcome back to Boni's Life, where we break down the most exciting developments in the crypto world with the precision of a Swiss watch and none of the inflated price tag. I'm your host, Boni, and today we're diving deep into what can only be described as a historic moment in cryptocurrency. Bitcoin has just smashed through $111,000, setting a fresh all-time high that has the entire financial world buzzing. But as always, we're not just here to celebrate numbers. We're here to understand what's driving them, what the experts are saying, and most importantly, how you can navigate these waters, whether you're just dipping your toes in or you're swimming with the crypto sharks. In the next 20 minutes, we'll analyze the market performance of the past 3 days with special focus on the last 24 hours, examine the global events that have influenced these movements, hear from leading voices across the industry, and wrap up with actionable trading strategies that you can consider implementing based on your own risk tolerance and experience level. So grab your favorite beverage, silence those notifications, and let's decode the crypto market together. This is the kind of financial literacy they should teach in schools. But until they do, you've got me. Let's start with the headline that has everyone talking. Bitcoin has surged past $111,000, reaching an all-time high of $111,800 just hours ago. This represents a 3.55% increase in the last 24 hours and approximately 5% over the past week. But this isn't just about Bitcoin. The entire crypto market is showing remarkable strength. Ethereum is trading at $2,638, up 3.78% in the last day. Solana has impressed with a 5.53% gain, currently sitting at $177.97. Cardano and XRP are both hovering around $2.42, each up about 3.14%. Some of our smaller coins on the watch list are showing even more impressive gains. SOA is up 4.2%, while our emerging players Sonic, Grass, and Avex are all showing strong momentum with gains between 4.5% and 12% over the past week. What's particularly interesting is that we're seeing Bitcoin dominance remain high, which according to market cycle analysis suggests we're still in the early phases of this bull run. The altcoin season index currently reads just 16, indicating that investors still prefer Bitcoin or holding cash rather than rotating heavily into altcoins. You know, it's like being at a party where Bitcoin is the first one on the dance floor. Everyone's watching and admiring, but they haven't all joined in yet. But trust me, when they do, that's when things get really interesting. So what's driving this remarkable surge? Let's connect the dots between global events and market movements. First and foremost, Moody's recent downgrade of US federal debt has had a significant impact on Bitcoin's narrative as digital gold. According to analysis from Motley Fool, Bitcoin has surged to its highest price since January following this downgrade, suggesting investors are increasingly viewing Bitcoin as a hedge against traditional financial system instability. This perfectly illustrates how Bitcoin continues to evolve as a macro asset. When confidence in traditional systems wavers, Bitcoin often strengthens, a correlation that's becoming more pronounced with each market cycle. Second, we're seeing unprecedented institutional adoption. Texas has proposed a strategic reserve policy that includes Bitcoin, signaling growing government-level interest. This isn't just symbolic. It represents a fundamental shift in how public institutions view cryptocurrency as a legitimate asset class. Additionally, spot Bitcoin exchange traded funds, ETFs, saw inflows of approximately $329 million on May 20th alone, while Ethereum ETFs attracted $65 million. Over the past 30 days, Bitcoin ETFs have seen inflows exceeding $6 billion, numbers that would have seemed impossible just a few years ago. Third, and perhaps most intriguing, is the growing intersection of politics and cryptocurrency. Reuters reports that buyers of President Trump's meme coin are converging from around the globe for an exclusive dinner at his private country club, with the initiative having raised $148 million. This highlights how cryptocurrency is increasingly becoming a political and cultural force, not just a financial one. What's fascinating here is how these three factors, macroeconomic concerns, institutional adoption, and political integration, are converging simultaneously. It's creating a perfect storm for cryptocurrency adoption that extends far beyond speculative interest. Let's turn to what the experts are saying about these developments. Dr. Kirill Kretov from CoinPanel offers a particularly insightful technical perspective. He notes, Bitcoin has just reached a new all-time high, and technically, the barriers to further growth have been removed. Liquidity has been significantly withdrawn from exchanges since late 2024, making the market thinner and more reactive. What Dr. Kretov is highlighting here is crucial. Lower liquidity means price can move quickly with little effort. He adds that open interest in BTC is pushing toward all-time highs alongside strong evidence of institutional participation, including ETF flows, large on-chain transactions, and OTC activity. Think of open interest like the amount of money betting on future Bitcoin prices. When this number gets very high while liquidity is low, it's like having a lot of people in a small room. Any movement gets amplified quickly. This creates the potential for what Dr. Kretov calls violent liquidation events, both upward and downward. Manish Chetri from FX Street provides additional context on market phases. He suggests we're currently in phase 1 or transitioning into phase 2 of the typical crypto bull cycle. In phase 1, money flows primarily into Bitcoin, causing its price to surge. In phase 2, Ethereum begins to outperform Bitcoin, followed by large-cap altcoins seeing increased inflows. Chetri also points out that over $500 million in leverage positions were liquidated across crypto markets in the past 24 hours, with 62.61% being short positions. This underscores how many traders were betting against Bitcoin's rise and were forced to close their positions, further fueling the rally. For those of you who aren't familiar with trading terminology, being short means betting that the price will go down. When it goes up instead, these traders have to buy back in at higher prices, creating a short squeeze that pushes prices even higher. It's like a financial game of musical chairs, where the music stopped and a lot of people were left standing. From an institutional perspective, the approval of Bitcoin ETFs continues to be a game changer. According to data from SoSoValue, these investment vehicles are consistently attracting hundreds of millions in fresh capital. This represents a fundamental shift in how traditional finance interacts with cryptocurrency. Let's dive into the technical picture for our key cryptocurrencies. Bitcoin's technical indicators are overwhelmingly bullish. It's trading well above all major moving averages, with the RSI showing strong momentum at 72, approaching but not yet in extreme overbought territory. The break above the previous all-time high removes a significant psychological barrier, with the next major target at $120,000. However, elevated open interest increases the risk of liquidation cascades if price reverses, and low exchange liquidity could amplify volatility in both directions. These are important risk factors to monitor. Ethereum shows moderate bullish momentum with an RSI of 65, with room to move higher before reaching overbought territory. The critical level to watch is $2,800, which coincides with pre-ETF approval highs from early 2024. Breaking above this could accelerate momentum significantly. The ETH-BTC ratio sits at 0.02312, up 1.7% on the day, showing slight recovery in Ethereum's relative performance. If this ratio returns to its historical average of 0.03, as seen during previous bull markets, Ethereum could target prices as high as $11,340, a scenario outlined by analysts at CoinGapes. Solana is showing impressive strength with an RSI of 68 and strong volume confirmation during recent advances. The $200 psychological level represents the next major target, with technical structure suggesting potential for outperformance compared to some other layer ones. For our smaller altcoins, SUI, SONIC, GRASS, and AVEX, we're seeing emerging uptrends with increasing momentum. These assets typically show higher volatility than established cryptocurrencies, which means both greater risk and potential reward. AVEX in particular shows promising technical structure, with consistent volume increases during price advances. Let's highlight a few projects that are particularly noteworthy in the current environment. First, Solana continues to impress with its ecosystem growth. Network activity shows significant increases in daily active addresses, and developer activity metrics indicate continued expansion. The platform's performance during high-volume periods has improved dramatically since the challenges it faced in previous cycles. Second, SUI is gaining attention for its implementation of the Move programming language, which offers enhanced security features compared to some competing smart contract platforms. Developer adoption has been increasing steadily, with several high-profile DeFi applications launching on the network in recent months. Third, OpenFX, while not one of our primary focus coins, deserves mention for recently raising $23 million led by Axel to build near-instant cross-border transactions technology. This highlights continued venture capital interest in crypto infrastructure despite market volatility and represents the kind of fundamental development that strengthens the entire ecosystem. Finally, it's worth noting that AVEX has been making significant strides in expanding its use cases and partnerships. The project has shown accelerating growth in transactions and active addresses, suggesting increasing adoption that aligns with its price performance. Now, for the segment many of you have been waiting for, actionable trading strategies for the current market environment. Remember, these are educational suggestions, not financial advice, and should be adapted to your own risk tolerance and circumstances. For beginners, a strategic Bitcoin accumulation approach using dollar-cost averaging makes sense in the current environment. This involves allocating a fixed amount to purchase Bitcoin at regular intervals, focusing on accumulation rather than timing the market. Set predetermined price targets for taking partial profits, such as $120,000 and $150,000. Risk management is crucial. Only invest what you can afford to lose, maintain an emergency fund outside of crypto investments, and consider setting stop losses at major support levels like $100,000 and $95,000. Think of this like steadily building a position in a valuable asset over time, rather than trying to perfectly time your entry. It's like consistently adding to your collection of rare books or art. You're building wealth gradually rather than gambling on timing the market perfectly. For more advanced traders, consider a strategic accumulation with technical triggers approach. Use pullbacks to key support levels as buying opportunities. Implement a scaled entry approach and use technical indicators like RSI, divergence, and volume analysis to identify potential reversal points. Position sizing based on portfolio risk tolerance, 1 to 3% per trade, trailing stops to protect profits, and hedging strategies can all help manage risk effectively. For those interested in altcoins, two approaches stand out depending on your experience level. Beginners might consider a staged allocation to top altcoins, allocating 60 to 70% to Bitcoin, 20 to 30% to Ethereum, and 10 to 20% to top layer ones like SOL and ADA. Gradually increase allocation to Ethereum as market shows signs of rotation, and watch for ETH chart BTC ratio improvement as a signal to adjust allocations. Advanced traders can implement a tactical rotation based on market phase, monitoring key ratios for early signs of rotation, using relative strength analysis to identify outperforming assets, and potentially employing pairs trading strategies. For smaller altcoins like SUI, Sonic, Grass, and Avex, limit exposure to 5 to 10% of your portfolio if you're a beginner, and focus on projects with strong fundamentals and clear use cases. Advanced traders might consider strategic rotation based on market phases, looking for coins showing relative strength during Bitcoin consolidation periods. Remember, the higher the potential reward, the higher the risk. Never invest more than you can afford to lose, especially in smaller altcoins where volatility can be extreme. As we wrap up today's analysis, let's put everything in perspective. We're witnessing a historic moment in cryptocurrency, with Bitcoin reaching unprecedented heights and the broader market showing remarkable strength. The convergence of macroeconomic factors, institutional adoption, and cultural integration is creating a uniquely powerful environment for crypto assets. Technical indicators suggest continued strength, though with the usual cautions about volatility and risk management. The key indicators to monitor in the coming days include Bitcoin's behavior around the $120,000 psychological level, the ETH-8K BTC ratio for early signs of rotation, funding rates, and open interest for signs of over-leveraging, and volume patterns during price advances and pullbacks. What makes this market cycle particularly fascinating is how the narrative has evolved. Cryptocurrency is no longer just a speculative asset class or a technological curiosity. It's becoming integrated into institutional portfolios, government reserves, and cultural conversations. This represents a fundamental shift in how these assets are perceived and valued. Whether you're a seasoned trader or just beginning your crypto journey, remember that education, risk management, and a long-term perspective are your most valuable tools. The market will fluctuate, sometimes dramatically, but the underlying technology and adoption trends continue to advance regardless of day-to-day price action. That's all for today's analysis. If you found this valuable, please hit that like button, subscribe for more insights, and share with anyone who might benefit. Drop your questions and thoughts in the comments below. I read them all and use them to shape future episodes. Until next time, this is Boni, reminding you that in the world of crypto, knowledge isn't just power, it's profit. Stay curious, stay cautious, and I'll see you in the next one.